Let's start off with these results released by Axis Bank. Profits up 15% to 15 billion naira. What did they do right?
For Axis Bank, I would say what we found really impressive was the 19% loan growth in the bank's balance sheet and performance over the last 3 months. It was well ahead of our expectation. We currently have a full-year forecast of 15%, and Axis Bank had performed that. And we also saw an improvement as well in non-performing loans ratio. That was down to 8.8% from 10.1% at the end of Q1, but it was still below our expectation of 8%. But I would say broadly the results were in line with our expectation. We expected the first half of the year to be slower than the full year, but I would say that the bank's performance has been gaining momentum, especially with loan growth. But in terms of returns on equity, it's still in line with our expectation. Currently stands at 9.1%, but it's still behind its peers like Skybank with an ROE of 12.3%. So I would say, even though the results was a significant improvement from Q1, but it still underperforms the likes of Skybank. But we also saw an improvement in cost-to-income ratio as well. That reduced to 61%, and I would say it's still in line with our full-year expectation.
Okay, Muyiwa, well, let's talk about them being an underperformer. Let's talk about Axis being an underperformer. Obviously, with the news that they're going to be paying a dividend of 20 kobo per share, it's boosted the share price today. But generally, we're told that the stock's been down 34%, way below even the all-share index for the year. So for any investor wanting to possibly invest in Axis, where's the value for them?
In my view, I would say the rally is still more of a medium to longer term story because of the current potential M&A with Intercontinental Bank. So in my view, I would say investors still think it's a longer term story. And unlike banks that are not going through M&As right now, the likes of First and GT Bank and Zenith Bank, they see potential in these stocks and feel these banks will recover better from the financial crisis. So in terms of investors looking for recovery in the immediate term, most banks and most investors would not really see that recovery in Axis Bank because of the potential, should I say, drag in performance that would be as a result of the M&A, because of the potential, because of the integration issues and the fact that the bank would have to try to improve cost for the group. So I think investors are seeing that potential drag in performance and so are already reacting to that. So I think that's why we've seen that underperformance relative to the whole sector as well.
Muyiwa, what's the future of Axis Bank? What is it going to look like structurally once it's merged with Intercontinental? We know that Axis, for instance, specializes in corporate banking. Intercontinental, despite a lot of its debt issues, has a wide retail network. So how do they bring these things together to create a symbiotic relationship? And the value for the company, because currently Axis is worth something like 120 billion naira. Intercontinental worth less than a sixth of that. So effectively for shareholders, what are they getting?
I'd say for shareholders, the value is still, like I said, in the medium to longer term, because it's clear from the H1 performance of banks that scale really matters. And that's why if you look at the performance so far, the Tier 1 banks outperformed the Tier 2 banks. And it's scale that's really helped these banks to achieve that. Cost of funds is significantly lower than that of the Tier 1 banks, and so that of the Tier 2 banks, I'm sorry. And so that's why we've seen a significant improvement in net interest margins for the Tier 1 banks, the likes of First Bank, GT Bank, and Zenith Bank's net interest margins have improved to about 8%. And so for Axis Bank, it's trying to get into that Tier 1 space and be able to operate efficiently at that level, because for the Tier 1 banks, cost-to-income ratio is still below 60%, while the Tier 2 peers currently have cost-to-income ratio at about 75%. So it's clear that scale would obviously change the game for Axis Bank. But like I said, I don't expect that value to come in the immediate term because of the dilution that the integration would bring in effect. And also, if you look at Intercontinental Bank's balance sheet, the risk asset is still significantly low. It's currently at about 15%, and so interest income would still be low for the combined entity, and it would have to grow risk assets aggressively in order to be able to operate at an efficient level.